All right. What's up, traders? What is up, tycoons? Super excited for today's video. Coming at you with another market update on TLT. We're actually going to take a look at a few of the bonds. So we're going to cover the bond market, give a good analysis on that on TLT. We're going to take a look at the TIPS bond ETF. We'll take a look at HYG, high yield corporate bonds. As well as some others. We'll take a look at TNX as well. And then I'll actually give you guys a quick breakdown of the S&P 500. We'll take a look at the VIX and a few other things that I actually use to gauge market sentiment and really give a good, gauge and really understand where the market is and what it's feeling. So make sure to smash the like button, subscribe to the channel if you guys are new. And if you're already subscribed, comment down below bullish or bearish on what you think market will do in 2023, if you're bullish or if you're bearish. So we'll go ahead and break down into it. We'll go over first off the major pattern that we're looking at. We're looking at a 5-wave Elliott structure here. In orange, we have our wave 1, 2, 3, 4, 5. And the way that the Elliott wave works is your wave 1 is going to be a 5-wave impulsive move. And then your wave 2 and your wave 4 are going to be ABC corrections, right? And we can see that this has been happening and, been playing out very perfectly, throughout multiple times throughout pretty much the whole year. Okay. So we'll take a look at our first wave here, and you see we have a wave 1 down, a wave 2 up, a wave 3 down, a wave 4 up, a wave 5 down. And then we complete our wave 1, right? Our wave A, the bigger wave down, right? And then we get our nice A, B, C correction wave up. Now, the reason we have these 3 levels right here, I'm going to explain to you really quickly. And simply, these are the Fibonacci retracement levels. These are the major levels that you want to pay attention to. These 3 are the most well respected. And if you take a look, what they do, the retracement levels are going to let you know whether you're retracing for a trend continuation, or if you break through them, you're going to get a reversal. Now, we can see pretty much the whole entire year, we've been rejecting our major retracement levels. We did it right here. Boom. All right. And then over here, we retrace up, continue the downtrend. Over here, we come down, we retrace up, continue the downtrend. And that's been the trend the entire year. So, we've been tracking that. Okay. I just showed you guys the ABC corrective wave. Then we have our wave 3 down right here, which should be a 5-wave move to the downside. We see we got 1, 2, 3, 4, 5 to the downside. And I started doing these videos right here when we were getting our ABC correction wave up. It's when I started, updating on YouTube what I am looking at on TLT. And we respected the levels very, very perfectly, right? We're going to zoom in now, so you can really get a much better sense. And look at how exact we got rejected right here at our 61.8 retracement level of 109.72. Since then, that has marked our completion of our wave 4 up, which again is that ABC wave up. So now we're looking for a 5-wave move to the downside. In my previous video, okay, I want to highlight that we've pretty much been following the TA almost, exactly. And it's been really nice to see. I mentioned that we broke this trend line here, right? There was a major trend line that we've been watching, and that, it's pretty much been respecting for a very long time in the year. We broke through that level, and I said most likely we are going to come down and retest this level. And if we retest this level, I wouldn't be surprised for a bounce. So, I do think that there is a chance for a dead cat bounce in the market as we've come down and retested this level right here. Once we break through this level, most likely, and start to close and really trade below here, we are most likely going to come down and fill this gap, which is this blue box right here. Now, something that someone said they really appreciated was me just mentioning that a half gap fill is pretty bearish. Okay, it's actually extremely bearish. So in particular here is a really good example of when that occurred. Okay, so at this point we have this gap down, all right, from these 2 candles right here. There's a nice gap, and look how we come up and fill half of this gap specifically, right? Look at how much we've puked since then. All right, that's a very bearish sign when you get half of a gap fill and it doesn't fill the rest of the gap. A lot of times, it's going to move in the opposite direction of that gap. So we had a gap up and we only filled half of it, and we've had a very sharp move to the downside. Now, this move to the downside has been very, very aggressive, and we've been gapping down a lot, right? Here's our first gap right here. We haven't filled that gap. Here's our second gap down right here. We filled half of this gap. We just gapped down again right over here. And then we just gapped down again even more recently. So keep an eye. If we do get a bounce and we only come up to the halfway point of this gap right here, which I'll give you guys the level real quick, that's going to be about 101.46. If we come up to 101.46, 101.50, and we get a hard rejection and start to head back down, that's going to be a very bearish indicator for me and suggest that, things could be heading further south. Now, the main thing that we've been waiting on, right, and that's really has been predicting this, has been the MACD. We were waiting on confirmation for a MACD sell signal. We got our MACD sell signal right here, and it's been a very, very sharp decline. Over here, I was telling people to be cautious, be patient, right? You don't want to be over aggressive. There was a chance we could have came up and filled this gap up here and extended our wave 4 up, our D wave up. That was definitely on my radar, so I was not ready to go aggressive shorting here, right? I mentioned to wait for the MACD sell signal. We got it right here, and this has been a major indicator of a downwards move, of a sharp downwards move the entire year. So we're going to go over just a few of the examples real quick. You can see right here. All right, we got a very sharp move to the downside off the MACD sell signal. This was August 8th, and then we dropped continuously till October of October 24th, right? Huge move. Over here, we got a MACD sell signal on June 6th, and we continued to drop until June 16th. Very sharp move to the downside again. Over here, we see our MACD sell signal happens on April 7th, and then we get a very sharp move to the downside. Over here on March 10th, okay, we get a MACD sell signal and then a very sharp move to the downside. And it's really just, been one of the best indicators to look for an exit if you are in a long position, or to go ahead and take a short position. Now, remember, none of this video is financial advice. This is all just, free videos that I do on YouTube, just simply trying to educate you guys on technical analysis and how you can start to use some of these strategies for yourself. Now, again, looking at this trend line here that we broke, okay, we could be looking at a very bearish setup as well, known as a look above and fail. So notice how we break through here, all right? This is our look above. And if we come back into this range, that's going to be a textbook look above and fail, and it's going to be another bearish indicator. So this trend line here is something you really want to watch for. Watch for the break of this trend line and wait for confirmation that we're actually trading below it and not just wicking below it or having one day candlestick close below, right? Like let's say we close here and then we go on some bullish rally. Keep in mind, we are waiting and looking and expecting for a 5-wave move to the downside. I mentioned in the last video too that most likely we're going to come back down and retest this level. And this is a good area for us to bounce, and it would line up with our 5-wave move for the downside, right? We could, extend it and drop some more. That's very possible, but I am expecting a little bit of a bounce in TLT sometime soon. All right, to give us our wave 2 bounce up. And then ultimately, that bounce, that dead cat bounce is just going to ultimately be to continue heading lower and complete the overall 5-wave structure to the downside. Okay, so the next one we're going to look at is going to be the TIPS, which is the iShares TIPS bond ETF. This is kind of like inflation protected bonds, all right, is kind of why people look at the TIPS. And the TIPS already made its 5-wave move to the downside. So I mentioned, I'm not really too sure on where it could go. I mentioned that I do think there's a good chance we could see a bounce. We did get a nice bounce. Now, this is a great example of just something, testing the fake out level. Okay. And so if you're not familiar with what I mean by that, remember how I mentioned earlier in the video that these are the 3 most important retracement levels: the 61.8, the 50%, and the 38.2. In the Discord, we like to call the 78.6 the fake out level, because a lot of times it will fake out traders with a break above the 61.8, and then you'll get rejected near the 78.6 and ultimately, continue that downtrend. Well, we've done this one time here in this year already. We've done it twice here. I mean, look at how exactly it's coming down to these levels. Bonds have been much easier to trade and a much better trade this year, because everything that the Fed is doing is directly correlating and affecting the prices of the bond market, right? As yields are going up and the rates are going up, as they're increasing the rates, you can expect the prices of these bonds to go down. That's just the way they works, right? If the rates go up, the price of the bonds go down, and they've been raising rates very aggressively. We had this nice little pattern here that we were looking at, and we did actually get a breakout above this. And this is a very good example of a look above and then fail, right? So we came here, we looked above, we came close to our 78.6 retracement level, which we know that's our fake out level after faking traders out by going above the 61.8. And then we got this look above and fail, and we've actually entered back into this trading channel right here, suggesting that most likely we're going to come down and test the bottom of this range on TIP, okay? So be very mindful of that. Right here is another MACD sell signal. You can see you got the MACD sell signal, and we had a very sharp decline afterwards. This is why, again, I really emphasize using the MACD, especially on the daily chart. It's most effective on the daily chart. And, that's the time frame that I'm making these videos on. The next one we're going to look at is going to be HYG, which is the high yield corporate bonds. Okay. And I like this one a lot. We've had some very nice setups on here. And things are just trading according to plan, guys. And we love it when things go to plan. And so the plan here was we were looking at this rising wedge pattern indicated by these two trend lines. This is a bearish setup, right? And so we're trading zigzagging and price action is squeezing in here. Notice how here we also have a look above and fail. So if you notice, we were tracking this trend line on the top, and really, I'll just zoom out real quick. We were tracking a bullish setup, right? A bullish chart pattern known as the falling wedge, right? So the exact opposite of this rising wedge. And we're zigzagging in between here, and we were looking to see if there's a possibility we were actually going to get a breakout. But look what we did. We got a look above and fail. We entered back into the range, and we've had a very sharp decline to the downside. So some of those other things that we were looking at where we're saying, hey, we have a look above and fail forming, right? Like how we had on TLT. These are very, very great visual examples for you guys to realize some of the potential that could be coming to TLT. And as well as some other plays, if you spot these. But anyways, we'll zoom back in real quick, and we can see ultimately we did break our trend line here to the downside. And once you break this trend line, we also got the MACD sell signal. So if you're looking to be a more efficient trader, I highly recommend waiting for a minimum of 2 signals together, right? You don't want to be jumping the gun and just trading something because you see 1 signal. You want to wait for 2. And in this case, our first signal is we break the trend line here, indicating that we're going to have a sharp move to the downside based off of this chart pattern. And our second is the MACD sell signal aligning up together. We get the MACD sell signal. And if we zoom in just a little bit even more, this couldn't be more textbook of a rising wedge breakdown. We have the breakdown, we have the perfect retest of HYG's trend line right here, and then we get the move down. So we get boom, boom, boom. Very nice moves there on HYG, and we've been tracking those and following those in this video. Now, the next one we're going to look at is actually going to be SLV. I did get some requests for SLV, and to start doing SLV in my market update videos. Here we can see again, SLV came up and tested the 78.6 retracement level. Okay. I just have it drawn over here, so the chart is a little less scattered and a little bit easier to read. But you can see we came over here, we tested those levels right around here, and we possibly put in a top. So we're waiting on the rising wedge to form, or not to form, but to actually break. Okay, so we did get a MACD sell signal, but the MACD has been very choppy, right? It's been going down, trading up, going down. There's a possibility it could curve back up, but we are starting to create some space between the red line and the white line on our MACD. As soon as we break this trend line here on silver, there's a strong possibility we're going to come down and retest 20.27. But before that, we have support levels at 2105, 2066, and 2027 are the 3 main levels that I'm watching. Those are our support retracement levels. If we break through those levels, then we're going to see an ABC move to the downside and potentially fill this gap down here on silver. This gap in particular, it starts at about 1868 and goes all the way down to 1803. So we'll just call it gap fill at 18. Currently, silver is at 2160, so that would be a pretty sharp move to the downside. However, we could be in the process of a 5-wave move to the upside. So it's not exactly clear. I'm not a fortune teller. We could be having a 1, 2, 3, 4, right? Even if we pull back and do break this trend line here and get a pullback, we could have a look below and fail and come back up. So you always have to keep an open mind and an unbiased mind, because the market is not going to do what it wants you to do. It's going to do what it wants to do. And silver is one of the most highly manipulated stocks and really commodity sectors there is. So it's very easy for them to, manipulate the price the way that they want and really, take traders' money. All right. That's what they're looking to do. So keep in mind, most likely we are about to fill this first gap right here on silver, which is going to be right at 2140. Remember, if you fill half of that gap, if we only get half of this gap in reverse, that's actually going to be pretty bullish. And we could have the potential of coming up here to fill the gaps up we have a gap up to fill at 2308. and a gap up to fill at 23.81. So I painted the picture already for the scenarios to reach that. We would have a 1, 2, 3, 4, 5 wave up. Okay. And that's how we could potentially fill those gaps up there. Or, once we break this trend line, we could come down here and get an ABC move to the downside, a 3-wave move to the downside, and potentially fill this gap right around 18. So be very mindful, be very careful of that. We'll take a look at the S&P 500 right now, which we've been absolutely killing it in the Discord. If you guys want to get, live market updates and really see what we're looking at, take a look at all of our trades. We have people making tons and tons of profits in the Discord today. We actually had 2 separate 200% call outs. And I myself had about 4 scalp trades today. I think I made about $1,500 in like 30 minutes of trading between all of my trades. So, very successful day today in the market. The link to join the Discord is in the description. If you use code Zackley, like the channel name Zackley Trades, you will get a discount on your membership. Okay. So very similar to TLT, S&P 500, we've been tracking a 5-wave move to the downside, with wave 1, wave 3, and wave 5 being 5-wave impulsive moves, and wave 2 and wave 4 being ABC corrections. Okay. So I'm not going to break down the entire past history of this, but things are lining up very similar. And to TLT, we can see here, we got our MACD sell signal. Okay, we got our MACD sell signal right over here. Look at what we had again. We broke this trend line. We get a look above and fail. We have a very bearish move to the downside. The S&P was down over 1.25 or 1.24% today. Big move to the downside. We are approaching our 61.8% retracement level at 371.85. So, there's any chance now for any day, eventually we could get our wave 1 of 5 down, and this would cause a bounce, right? And so we're looking to catch a dead cat bounce sometime in the market. It could be this week, it could be next week. Who knows exactly when it's going to be, but I do expect some type of a bounce, ultimately just to continue heading down lower. Now, again, none of this is financial advice. I don't know exactly what the market's going to do, but we're just tracking the patterns and tracking the movements. And, they've been following the Elliott waves very well. So it wouldn't surprise me, let's say, if we come down to 371.85 and we get closer to this level. As we get closer to this level, if we start to find some support, we finally broke our 50% retracement support at 379.15. Look at how well we held that level of support. Again, this is a daily chart. So we had 1 day, 2 day, 3 days, 4 days, 5 days, an entire trading week of holding our 50% retracement level before ultimately it just gave out today and we had the big flush to the downside. So, again, we're looking to see some type of a little bit of bounce. This is another great example of a half gap fill. All right. So you notice how we come down, bounce off the 50% retracement. We got the half gap fill, and then we got a sharp move to the downside. Just keep that in mind, right? And try to use some of these strategies yourself and try to start practice, charting them up. The strategies that I'm going over in this video. Now, the next thing we're going to take a look at is going to be the VIX, the volatility index. Volatility index has been trading one directional for pretty much the entire year. It trades in one direction for about a month or two, and then it gets a sharp breakout, and then it goes back down to trading downwards. The main thing that I want to highlight is that if we take a look at the VIX for this year, okay, it trades in one direction, and then it gets a sharp breakout. It gets a pullback, a very sharp pullback, right? The VIX goes from here all the way down to here, and then it gets that big push up again, right? And then we start trading in one direction down, right? And then we go one directional to the upside. But each time we do that, we get a breakout, we get a very sharp pullback, and then a continuation up, right? We'll just go on and look, right? It just keeps repeating that pattern. We see, again, we're seeing, trading in one direction going down, then we get the one direction heading up. But in that process, we get a sharp move to the upside, a big move to the downside, and then a continuation of that upwards momentum. So looking at where the VIX is at currently, what we see is we finally broken out of our wedge here. We got a sharp move to the upside. We've had a sharp pullback, and there is a potential that this pullback could be done. If this pullback is done and we don't continue heading lower on the VIX, then it could start to skyrocket, right? And so, that's something that I've actually been taking a couple long positions in just gradually as things have started to pull back. I have a very small position in the VIX. I think I have about like 3 option contracts with the February expiration just to see and catch, and see if VIX is really going to take off up here. Okay. The MACD is staying above the white line right here. It hasn't It hasn't gotten a sell signal indicating that, we're most likely about to see a sharp move to the downside. In fact, we got the MACD buy signal right over here. So here's our MACD buy signal. That's right over here. And you can see, that date was on December 2nd, and the VIX has slowly started to creep up and trying to establish a new trend and could be trading in this direction for a good month or two. If history repeats itself and it continues those patterns. Now, one way to gauge stock market sentiment is going to be using the skew index. What the skew index does is this tracks out of the money protection. So what out the money means is that, SPY is around 380 right now. Out of the money protection means that people are purchasing 350 put option contracts, right? Those are out of the money because we're not down to 350 yet, right? So as you see an increase in skew, then you will see typically a decrease in the stock market, right? We can see that we had a very large spike here. This was on Friday, November 25th. And then the following Monday, we had a very, very red day in the market. Over here, this is Thursday, December 15th. We saw a nice spike in the skew index, right? And shortly afterwards, we saw a very sharp drop in the stock market. So notice how I've been mentioning that, there's basically potential for a dead cat bounce sometime soon, and the skew index has been in a sharp downtrend. Meanwhile, the stock market has been in a downtrend. So even though stocks are going down, people are not purchasing out of the money protection at the time. So I do think, not only is this due for a, move to the upside eventually, but this also suggests that, hey, people aren't as bearish as the stock market indicates, even though, a lot of the markets have been dropping and heading down. You don't see a lot of people rushing in to buy out of the money protection. So, if this continues to go down, that just supports the dead cat bounce theory. And once you start to see this thing spike, usually that is going to coincide with a sharp drop in the market. Another thing I really like to look at to help gauge sentiment, and this is really good for you all to start tracking, is going to be SPY G versus SPY V. This is the S&P 500 growth sector versus value. So typically in bull market cycles, you're going to see growth outperforming value, right? And that's where the money is going to be flowing in, right? You're going to see it. And as you see this go up, this means that, growth is outperforming value. And as you see this decline, this means that value is outperforming growth. And it's no secret that value's been outperforming growth as investors are looking for safe havens and, much safer plays and really looking to get out of those risky growth plays, right? And so we can see we've actually came down and filled this gap down we had here to fill. Okay, I'll put this back on the candle chart for you guys, just so you can see there was a gap, right? We had this nice gap to fill. We've come down, we filled that gap. We are watching a potential falling wedge. Okay, so I'm paying attention to these trend lines here and looking to see if there's a potential chance we could get a breakout to the upside and fill some of these gaps up here. Now, most things are indicating bearishness. If we look here, we got a MACD sell signal, and it's been declining just like most of everything else we've looked at. Another thing that I really like to look at is XLU/XBI. Now, what this is, sorry, got the hiccups, is utility sector versus biotech sector. And the reason we look at this is because biotech is arguably the most risk on sector. So not only can you look at the VIX to determine if the market is risk on or risk off, you can go ahead and you can take a look at XLU versus XBI. And if you see this go up, it means that the market is more risk off. Okay. And the reason being is because utilities are a very risk off sector. So if you see the risk off sector outperforming the risk on sector, then you can know and get a gauge that, hey, the market is more risk off right now. And we can see we actually got a breakout of this triangle pattern here. We had a clear breakout, retest, and then continuation. Remember, the exact opposite of a look above and fail. Instead of looking above and failing, we got a breakout, retest, and continuation. Now, we were looking at these three major support levels just to see, if we're going to continue this trend of being risk off. If we were going to hold support at these levels. We've been holding support, and we actually just broke above our 38.2 retracement level and, got the clean break and retest. So it just tells you hey, the market is still risk off right now. As you start to see this decline, okay, and you start to see biotechs outperforming the utility sector, then that's when you can expect things to be a little more risk on. If you take a look at the VIX around that time, then most likely the VIX is actually dropping, and it'll help gauge you on some of the different plays that you can get into, right? Let's say you're sitting heavy in some utility plays and some safe plays, some risk off plays, and you start to notice, or you start to wonder, hey, I'm starting to see a decline in my utility sectors, and a lot of these biotechs are popping off. Let me go ahead and take a look at XLUXBI and see maybe if it's time to get into some biotech plays, and try to ride some of that momentum. Okay, so that's it for today's video. Just some chart updates. Wanted to give you guys an update before the market opens, so that way you're prepared for the rest of this week and heading into the first week of 2023. A lot of times people expect, January to be filled with a lot of retail buyers. That sentiment kind of would match up with a lot of the charts that we're looking at, suggesting we're due for some type of a dead cat bounce. There's no guarantee that the bounce won't be a sustained move higher, and there's no guarantee that we will actually get a bounce and that we won't continue heading lower. So again, that's it. Really appreciate you guys watching. Make sure to smash the like button, subscribe to the channel. I do viewer requests every week. So if you want to see an individual video on a specific ticker, whether it's a bond, a stock, a cryptocurrency, I'll be happy to make it for you as soon as I can. And yeah, I'm out. If you made it this far, I really appreciate you. And you're most likely going to enjoy one of these next videos as well. So make sure to click one of these two videos.